Hey, how's it going? Today I want to take a moment to show you how I got to all of this. In other words, I want to show you how to do the backtest of a very simple trading strategy, as this is a key step in creating a trading bot. The backtest I'm going to present is coded in Python. Don't worry if you're not too familiar with programming, as the whole point of this tutorial is to walk you through the process pedagogically. Note that all our codes are free for you to use and can be downloaded in our GitHub. I will leave a link in the description down below. This video is divided into 3 parts. The first is for the setup and the processing of the data. The second is where we will do the backtest. And the final part is where I analyze and comment on the results. Enjoy! Let's start with the setting up and the processing of the data. The code I'm going to present is in the form of a Python notebook. You can see that the extension of the file is .ipynb. I find that very useful when presenting a code because thanks to this, you can execute parts of the code in cells. So this is a cell, this is another cell, etc. You can execute them one after the other or independently of one another. And I'm using Google Colab to run this notebook. Let me say a few words about backtesting first before we dive into the code. Backtesting means testing a strategy with past data. But I must warn you, past performances never guarantee future results. So you might tell me, well, why are we doing this then? Well, there's essentially 2 reasons. The first one is quite obvious. If your strategy didn't work well in the past, there's practically no chance that it'll do good in the future. But the second reason is the most interesting, because it is by doing the backtest that you will understand how your strategy works, and notably in what market condition did it perform well, and in what market condition did it perform not as good, and why is that? Like that, you'll be able to understand, get a feeling, and probably improve it. Okay, let's dive into the code. So the first part is to install the packages we're going to use. One of the good things of the notebooks is that you don't have to worry about having done that on your machine. This cell here is going to just install things virtually for the session that we've opened now. So you also don't have to bother about compatibility issues, etc. Google Colab is just going to take care of this for you. So let me run it. Let's let it do its thing and move to the second cell. So now that we've installed the packages, we need to import them. That's for the code to know that we're going to use these packages, so it fetches all the functions that we're going to use. So let me take a few minutes to tell you what packages we're going to use then. The first one is pandas. This is probably the biggest library in Python. This is what is used to deal with large data sets, to clean tables, to process tables, and that's exactly what we were going to do with it. The second one is a Binance client. So now don't worry, you don't need any account with Binance, etc. to use this. This is just going to be the library we use to download our data on the coin we're interested in looking at. TA then, TA stands for technical analysis. This is a big mathematical engine if you want, and that's what we're going to use to compute our trading indicators. And lastly, matplotlib. This is the standard library to make some plots in Python. Okay, so let me run this now. Next, I want to define the specifics of the coin that we're looking into. So for this example, I decided to use the pair BTC USDT. You're welcome to change that if you want. In the same way, I'm choosing to work on a time frame of 1 hour. So that refers to what chart I'm looking at. I'm looking at the 1 hour chart. It could be 1 day, 1 minute. This is also up to you. And this is to choose a starting date for the backtest. And one could choose an ending date, but I'm not interested in that today. We're just going to do the backtest until today. So let me run this. We're defining those variables, and you can see that those variables are now plugged in here into this function. That's the function that we use from the Binance client. This is to get our historical data on BTC. So this will download that data, and it is going to take a while. It depends on the speed of your internet, but it can take a while. We're essentially asking for data since somewhere around this beginning for every hour since then. So that's a lot of data to fetch. So let's move on to the rest while it's downloading. The next step is to store the data that we've downloaded. So the data comes into the form of an array with many columns that I've titled here. What we're doing is to take this array and transform it into a data frame. That is the typical pandas object that is used to process your data. So that's why we have pd.dataframe. And this is basically a downloaded data. Let me just run this and we can see what will come out of it. So you can see a big table with a lot of information. We're going to get into this just now. Let me give you a little tip. When you're processing data and you've downloaded it and it, for example, took time to do that, you might as well make a copy of the raw data into a new object, and then you will do the cleaning, you will play around with your new object, but you never change, you never affect the downloaded data. In other words, why do I do that? Well, imagine you play around, but you do a mistake, and then this data, the data in this object is now not good anymore. Well, rather than having to download the whole thing again, you just come back to this cell and rerun that. It will reset the data. So there's a lot of, I mentioned there's a lot of columns. There's actually things here that we're not interested into, and that's not interesting for our strategy. So one of the first things to do is just to remove those columns. So this is what this cell does. I'm using the syntax drop, and drop what? The difference. This actually means keep just those columns. So the standard timestamp, so this is actually a date. The open value, the high value, the low, the close of the session, we're looking at a 1 hour chat of BTC, and the volume. So the standard OHLCV data. Now, the first column of a pandas data frame is what we call the index. So you see this is just the labeling of the rows. Note that it always starts at 0 and not at 1. The timestamp, this is actually a value in milliseconds. That's how the exchanges work. But for us, this is not really understandable. So we might as well convert it into something we can understand. So that's what this next cell is for. So we are going to do two things. First, I might as well get rid of this column of the index because I'm not going to use that. I might as well make the timestamp the index column. So that's what the first thing is going to do. Then I'm going to tell it, well, convert that into a date and delete the previous timestamp. Let's run it and see what happens. And there we go. We have something much more intelligible now. The timestamp is a date and an hour. Remember that we chose to work with the 1 hour chart, so all our rows are of 1 hour. And we have, for that session, open, high, low, close volume again. A little bit more needs to be done because looks can be deceiving. And those numbers that are here, we'll see that the type is not actually what we want. It's a string. So this is encoded in the form of a string, but the technical analysis library that we're going to use needs to have numerical values. So we have to transform that into numerical values. And this is what this next cell and those functions are for. So let's run it and let's check. And we see that now one of those numbers in here are of the type float64, which means double precision floating number. And that's exactly what we want. So we are all good. Last step, we have to define and compute our indicators. So for this strategy, I chose to use simple moving averages. And you see, this is where I'm using the TA library. If you want, you could use exponential moving averages. That's what's commented here, or other indicators that you want to test. That's really up to you. You can play with that. If you're not too familiar with moving averages, you can check our previous video. I go over the fundamentals about them. I'll leave a link in the description below. So you see, this lines actually means that I'm adding now 2 new columns in my pandas data frame, my data, a short-term moving average and a long-term moving average. The values for that are, for the first one, 200 hours, because we're working with the 1 hour time frame, and the other one is 800 hours. Now, a few words about this. So this is the example that I chose to highlight today. It is quite possible that you can find values that will give even better results. Maybe you also want to change coins and try for yourself. I just want to give a few words of caution on over-optimizing. This means trying to find really the best values during your backtest. Remember that past performances don't guarantee future results. So a value of a parameter that did great in the past is not necessarily what will do best in the future. So you have to be aware about that. Okay, let's run the computation. And you see that now 2 columns have been added, our short-term moving, simple moving average, and our long-term simple moving average. You notice here that we have nones, which stand for not a number, and that's completely normal. At the beginning, by definition, there's no past data. So there's no data to do a 200 hours moving average at the beginning. That's why you have a none. So let's just clean this. I'm just dropping the lines with the nones. And there we go. We have our final data set that we can use for the backtest. Let's just do a check with TradingView whether the last opening value of the last candle is indeed around 20,200. So let's go to TradingView and check. So the last candle is indeed around 20,200. We're all good. Now that we have finished processing the data, we can move on to the backtest. The first part is to define the wallet that we're going to use. So for this example, I'm starting with a wallet that contains 1,000 USDT and 0 BTC. Then I'm defining the trading fees. So this is 0.1%, is quite a standard value for exchanges, but it does depend on the exchange. I want to caution you, it is very important to always include your trading fees in a backtest. You might find that the strategy does well without trading fees, and as soon as you put them, then your gains are reduced a lot. This is especially true when you're using high-frequency trading strategies, like for example, scalping, etc. Then I'm defining two functions. These are the key functions of the backtest. This is where we define our buy and sell conditions. So for this strategy, I'm using a very simple example, which is I would buy when the short-term moving average goes above the long-term moving average. And conversely, I would sell when the short-term moving average goes below the long-term moving average. Those conditions are written such that if this condition is verified, then I return a true, and if not, I return a false. And the same for the other one, but with the short-term, long-term reversed. Note that in Python, you don't actually have to use this full structure here. You can reduce all of this into just one line, but I think this is more intelligible, at least for the beginning. So I'm leaving that as is. So let's define those functions and go to the backtest. So how will we do the backtest? Well, we'll actually loop over all the rows of our data frame and see when a trade is going to happen and not. That's why we're using a for loop here. But I must define a few important quantities, variables that we're going to use. The first one is that the amount of USDT that our wallet will contain is going to vary as our trades happen, and the same for the coins. But at the beginning, they are defined to be the starting values that we chose. Then I want to track all the trades that are going to happen, and that's why I'm defining this empty array here. I also want to track the value of my wallet at every row of the backtest, and the same for the buy hold. The buy hold is the strategy where at the very beginning, I converted all my wallet into Bitcoin and I just held onto that and did no trades. Okay, so you see now we're going to start the for loop. So I'm looping over all the rows of my data frame one by one. So for each row, what's in here might execute or not. And let's go through that together. Here, I'm defining a variable, which is value, which is therefore the value of my Bitcoin at a given row. You can note that I'm choosing the closing value. You could choose the open. This is up to you. It depends how you want to trade. Just what is important is that you use the closing value all throughout or the open value all throughout as well. Okay, then the buy condition. You can see that I'm coupling this with an extra condition, which is to have USDT in my wallet. Of course, to buy, not only should my buy condition be verified, but I should also have enough money to do it. So that's why I've added this USDT bigger than 0 here. So what happens if the buy condition is met? Well, all my USDT is going to be converted in my coin, so in our case BTC, and that's why I divide USDT by value. Then we mustn't forget the trading fees, so not all of this is going to be exactly converted, but a little amount is going to go to the exchange. That's why we have this line, and note that trading fees are a ratio, and that's why we are doing it in such a way. Another little Python tip, you don't have to do coin equals coin times something. You could write it like this if you wanted to, but I'm keeping it like this as it's maybe more understandable like that. Now, what happened if we've converted all our USDT in BTC? Well, we have no USDT in our wallet. So that's why I've set the USDT variable to 0. Then, as I said, I want to track the trades. This is why I'm appending this information into trades. So we want to remember what was the date, the side, in this case, it is a buy, the price, so the value of BTC at that point, the amount of coin that I bought, and the amount of USDT that I have left. We know that this is going to be 0. And the value of my wallet after this trade, it is going to be all in the form of BTC. So therefore, the value, the USDT value of that will be coin times value. Then if the buy condition is not met, then maybe the sell condition is met. And in the same way, we add a condition on top of this sell condition is to have coin. Obviously, if we want to sell BTC, then we need to have BTC in our wallet. So that's why I have coin bigger than 0. And what would happen if I sold? Well, all our coins is converted into USDT. So that's why I've written USDT equals coin times value. I don't forget the trading fees. And then I set the amount of coin that I have to 0. Same thing here. I track the trade that's happening. I didn't mention the print in the first instance here, but this is just a print to show us as the loop is going when the buys and the sells are happening. Okay. These if might not always trigger. We'll see they don't trigger that often. But what I want to make sure is that at every line, I track what is the value of my wallet and what would be the buy hold counterpart. So if I am in the form of all my wallet is converted into BTC because I previously did a buy order, then the wallet is in the form of BTC. So its value would be coin times value. On the opposite, when I've just done a sell, for example, all my wallet is in the form of USDT, so I'm appending the USDT value. The value of the buy hold strategy at a given time is going to be the amount of USDT I had at the beginning, which I converted into BTC at the price of BTC at the beginning, times the value of BTC at the given time. So let's just run that and see what comes out of it. And you can see that our prints are happening as we go through the rows of the data frame. We have some buys and some solds at different prices, different times. Great. We can check on TradingView if this does coincide with the moving averages there. So the last trade was a buy that happened on the 26th of October at 6 p.m. Let's check. I have my two moving averages here. And the last crossing is indeed on the 26th of October at 6 o'clock. Perfect. So as I said, I mentioned I track these trades. So I want to process this into a data frame so it's nicely presented. Let's run that so we see directly what we get. Note that I'm rounding the numbers because I don't want to have all the decimals. I'm not interested in all of them. So this command here is just for that. And there we go. We have our table with all our trades. You see a succession of buy, sells with the wallet. Note that this is not exactly 1,000, and that's because of the trading fees. Okay, let's go through it. We can go down, and you see that we've done about 59 because this is 58 plus. Remember that we start at 0, so that's a total of 59, and then we finish. The last trade was a buy, and the value of our wallet at that point was this. This is to count how many buys and sells we've had. And as you can see, 30 buys, 29 sells. So this is not a strategy that does a lot of trades. It's more of a long-term strategy if you want. Let's now analyze the results of this strategy. So in this first part of this cell, I'm printing some information. And this second part is making a plot. I don't want to detail all of this now. You're welcome to ask me questions if you need. So the results. In summary, we started with 1,000 USDT. If we just did the buy hold, meaning we bought BTC right at the beginning and held on to it until today, we would have made about 5,000 USDT, which is equivalent to a bit more than a 400% profit. Using this two simple moving average strategy, we would have made around 15,500 USDT, which is about almost 1,500% profit. So about 3 times more than the buy hold. And you can see the value of our wallet across time. So the golden is the wallet and the purple is the buy hold. This really traces the value of BTC, while the yellow is our strategy. It's interesting to see what happens. It really made the most of the ramping up of BTC, and it tried to limit the downfalls that you can see here. Let's pay attention to those flat sections. I'd like you to take a moment to try to guess, what do these mean? I'll give you the answer. It means that our wallet is all in the form of USDT, and that's why the value remains flat. So in other words, the strategy is saying the market is not doing well, so I'm not buying any BTC at that moment. And you can see that those plateaus happen when the market is going down. And it's quite interesting to see, for example, here, where this downtrend corresponded to a plateau for our strategy, not all of it, but then it tried to make the most of this little ramp up here, and the same at this point here. And this, I think, is what is quite interesting to analyze through this backtest. Remember that we're not financial advisors, and investing and trading does involve a high risk of losing capital. I do want to add that the point of this video was not to show you the best strategy ever. This is obviously not the case. But it was to give you some very simple and basic material to do your own backtest, so you can test and get a feeling of how these things work. Remember that our code are free for you to download from our GitHub. You have a link in the description down below. Okay, this was Louis at Robot Traders. I hope you enjoyed this video. If you have, don't forget to give us a like and subscribe to our channel for more content. If you have any thoughts, comments, or questions, don't hesitate to drop them down below, or feel free to join our community Discord. Until next time, take care.